Mega Projects Africa, proudly brought to you by Santam.
Hello and a warm welcome to Mega Projects Africa, where we'll be discussing infrastructure on the continent. I'm Gugulethu, Cele. Infrastructure is the cornerstone of the African economy, and it is crucial for African governments to step up their investment in the sector if poverty is to be eliminated on the continent. Our topic for today is how can we unlock infrastructure development in Africa? Here with me to discuss these and other matters are Karl Bishop, Head of Niche Business at Santam, Professor Mosad Elmissiry, Senior Advisor on Renewable and Sustainable Energy Initiatives at NEPAD, Zienzi Musamirapamwe, Head of Public Sector Corporate and Investment Banking at Barclays Africa, excluding South Africa, and Paul Runge, Managing Director of Africa Project Access. Ladies and gentlemen, thank you so much for joining me today. It certainly does seem like an exciting topic that we'll venture into, given the fact that we understand the dire need for infrastructure development on the continent, despite the growth prospects in Africa being positive. But I'd like to get a quick fire view from each of you. Glass half full or half empty when it comes to the opportunities presented for infrastructure development on the continent? Paul, let's start with you.
Yes, firstly, it's definitely glass half full, because the project flow coming out of sub-Saharan Africa, which is where the area I specialize in, is particularly strong at the moment, very much based on resources. So we are suffering from these low resources prices and commodities prices right now. But nevertheless, we have an optimistic view, and certain sectors are flourishing. For example, the energy sector in East Africa, there's a strong project flow from there. So it's definitely glass half full for us. We are optimistic, we are busy with projects, so that's evidence enough.
That's an optimistic view. Zienzi, do you share the same? Glass half full or empty?
I would say it is full, full of half water and half air. So it is for huge opportunities. If we look at the regional integration being driven by the Pan-African Union, there are opportunities there. You've got, urban migration, more people coming into cities. It's projected that the continent will need about 3,000 cities from currently about 1,500. So more people be coming into cities. That creates, again, opportunities from an infrastructure perspective, as people would need, infrastructure like transport, energy, to be able to, to live in cities. So huge opportunities. Africa has never been this far before, and Africa is just going to go up and up.
I like the optimistic starts that we've already started the conversation with. Mosad, you cannot disappoint us here. Half full or half empty?
Actually, it's overfull. Neither actually half. It's really overfull. Because if you look to Africa as a continent and what the head of the state and the government decided in 2012, they approved a massive infrastructure energy project. It's called the PIDA. Energy is actually a component of it, which really map the development of the infrastructure in Africa up to 2040, including transport, energy, ICT, and water. Last January, again, the head of the state and the government in their meeting in Addis Ababa approved what we call it Africa Power Vision, where we want Africa to go when it comes to actually the energy project in particular. And this sets the vision which we actually want to achieve by 2040. Accessibility, they're looking for 90% on the industrial sector, and on the domestic sector, they're looking for 80%. Not only that, they put actually an implementation plan on how we achieve this target by 2040. So I'm actually over-optimistic on where we are going and when we are going to achieve that.
I'm happy to hear that. Karl, you can't disappoint us either. Glass half full or empty?
I think it is half full. I think there's plenty opportunity. I think maybe the discussion today is how do we unlock that opportunity, because there are some challenges. I think to what Paul said earlier as well, a lot of the opportunity is linked to commodities, okay, and obviously that will have its effect as the fortunes of the commodities change through cycles. But I also think something that I find interesting is that the population growth of Africa and sub-Saharan Africa is, projected to double that of the North America and South America. So that in itself prolongs that opportunity, because more people, you need more infrastructure, you need more cities, you need all of those sorts of things.
Precisely. 2 billion people, I understand, is estimated to be on the African continent by 2050. But you're quite right with where all of this starts. Does it come with government policies? Because so often we hear that they perhaps the guys who need to take the lead when it comes to infrastructure development projects. Mosad, maybe if we can get your view there.
That issue was discussed in the Dakar Finance Summit, which was held in Dakar in June last year. They were looking to the challenges which actually are facing the development of the sound infrastructure project in Africa. And one of the challenges is what you said, what we call it conducive environment for investment. This includes the legal framework, the policy, the regulation. And they set actual strategy. How can we attend to that challenge? Not only that, there's another challenge which is facing the development of infrastructure development project in Africa, which is raising the project, what we call it bankability, a stage where the investors can come and decide whether we can invest or not. Again, they set the mechanism on how we can assist actually national and regional entities on developing their project to bankability. Once it reaches bankability, investor can really come and say, yes, we can invest or not. Because when you talk about bankability, it addresses actually certain issues in the project, which is economic, the technical, the social viability. Once the project is economically viable, the investor will come and invest. So all these issues were addressed on the Dakar Finance Summit last year in actually June, and they put a strategy on how we attend to all these challenges. This is some of the challenges, but I can actually leave this to my colleague to contribute as well.
I'd like us to venture there because it also seems as though these governments shouldn't be working in isolation, Paul. And given the opening line that you told us about the East African countries working together to unlock the energy potential that's possessed in that country, is this something that the rest of the continent should be looking at and learning from?
I think we're striking a very important point here. If I can just be a little bit critical here, as I represent business and I'm servicing 170 companies, I'm constantly traveling in the markets, there is a major disconnect between the policymakers and the operators. We have to bridge that gap, and we're not bridging it effectively. And one of the reasons why the East African community is particularly active is if you study the way that the East African community operates, it has real and meaningful participation of the private sector in those briefings, which you don't find meaningfully, in my opinion, in Southern Africa. While I value very much chambers of commerce and organizations and so on, you've got to get down to the operators, because somebody in a boardroom can decide to put up a railway line and put $1.5 billion into a railway line, and it changes all the plans that has been made in these summits and things. So there has to be a connect between the operators and I go to a lot of financial fora, and at the end of it, I'm asked, what do I think? And I say, well, you guys, you've been talking banks, equity fund managers, DFIs and so on, but you don't build roads. And where were the contractors in the room? We've got to bridge that gap.
How do we do that, though? Because does it mean that getting everyone together at the same table to discuss similar issues, or does it take full commitment? Because maybe that's where we fall short. We can all talk, but the implementation is what's key.
If you look at successful countries and the way that they operate, if a president from a country that's successful usually brings its business community in, pre-identifies what projects are being looked at, what do we need to get out of this visit, what should we aim at, it's concerted. It's not a general sort of general thing, just to shake hands and be happy. We've got to come in with a proper meaningful. We've got to identify the real role players, there is such a thing as a private sector bureaucracy as well. And while they are important, don't get me wrong, I work with them. I'm probably part of that, you could say, although I'm 100% private. I think we have to drill down to the decision makers. Not easy because the private sector, what is it? It's so it's not homogenous. And how do you bring that together? But I'm in contact with those people as part of my job. So I listen to them very carefully as to what's being said, and what we often have closed briefings amongst ourselves where we discuss our difficulties as we go into the continent. And they often have to do with the links with government.
It almost seems as though the theme of partnerships is certainly something that's coming through, not only between the public and private sector, but also those governments communicating across their borders in order to show that the common goal is achieved. Zienzi, maybe if we can come to you. You've often been quoted in many articles about how PPPs can potentially be implemented quite seamlessly. Does it take incentives for the government to say to the private sector, look, we'll give you tax breaks? Or does it take the private sector also offering their full commitment to government? What are the key elements that you've noted in your projects?
Thanks, Gugu. I think just to dovetail to Paul's point, the issue here is building trust between public and private sector. The two have to meet each other. And it's a process, and it's tested through projects that will be undertaken. So public-private partnerships, very key, very important. If you look at the projects that are out there, these are big-ticket projects. The numbers are big. Looking at public sector governments, most of them, they are reaching already their debt GDP ratio. So there is a need for public sector to come in and join together with public sector or government. Now, how is it going to be done? That's, I think, the issue. And I believe there's a huge opportunity for private sector to reach out to public sector and for government to do the same and get around the table, maybe set up some maybe quality circles or public-private partnership forums in a country or at a regional block level. I know NEPAD have been talking about that, so I'm sure my colleague will have time to talk about that. But there's a huge focus and there's a need for the two to be working together. And looking again at PPPs, if you look at a number of projects, we know what the projects are. They are out there. And it's not an issue of shortage of funding, but it's really about the process to get to a bankable stage. Now, most of these projects, they are stuck at the project preparation stage. Now, how can we work together with government to unlock those projects from that feasibility stage or project preparation stage to a bankable stage? That takes really private sector to also come in, and not only private sector but also the DFIs. Some of those DFIs, they do have risk capital or project preparation capital, which they can actually bring to the table to help governments take the projects to a bankable stage. So that's point number one. And then point number two is really about the capacity to be able to bring those projects to a bankable stage. You find that governments, they are working on PPPs, establishing PPP units, which is great, but is the capacity there to be able to get the projects to a bankable stage that will attract the investors? And we are looking not only at Pan-African investors, but global investors. There's a huge appetite out there for projects on the continent, but they have to come to a bankable stage, and there has to be capacity to bring them there. And then the other point is the enabling environment. Do we have the enabling environment, promulgation of the PPP regulation or regulatory framework? Some of the governments, the trend that we are seeing now, they are bringing the PPP units, frameworks to Parliament, which is great, but it is a process. So capacity building, help is needed in that space. That's what I believe.
I would like to go ahead, Professor.
Actually, if I can just add what Zienzi said and Paul, the emphasis which the head of state and the government puts on the participation of the private sector is quite immense. We need about 45 billion every year to fill the energy gap. What is being invested now is about 10 billion. From where the difference will come? We look at the private sector. That's why you have to create conducive environment for the participation of the private sector. And you have to strike a balance, because the private sector has got their own interests, government has got their own interests, and you have to strike a reasonable balance between the two interests. And the PPP is one actually of that machinery where you can bring the private sector, because at governmental level, of course there is limitation on the finance, and the finance is a very important element to get the project implemented. Now, because of that constraint on the finance at the public sector, we have to look to the private sector. And we have to come into partnership, we call it PPP. But of course, PPP comes with its actual pros and cons, because it comes at a cost. The PPP comes at a cost. But from a government side, we have to look to the cost involved in a PPP project and the efficiency with which it comes. Because PPP project, they come with efficiency, better project design. So if the gain from the efficiency and better project design actually outbalance the cost involved will go on the PPP. So this is actually one of the machinery, but the emphasis which we put on the private sector is quite immense. Now, how can we bring them together? There is NEPAD again create what we call it NEPAD Business Foundation. It's a foundation which can bring all the business community together and link it to NEPAD, and it's our project. Last month in Cape Town, we launched another network which is specifically for private sector to link them with PIDA projects. And the captain of the private sector were all present there. So we're quite aware of the important role which the private actual sector can play. But the private sector has to come as well. Private sector don't touch to invest at early stage of the project, but the risk is very high. And they don't want to put their money in the investment. They wait until the project reaches bankability and the economic viability is actually confirmed, and then they want to come in.
But can we blame them though, Mosad, if I can come there? Because it goes back to what Zienzi alluded to, which is the trust element. And again, as you allude to, private sector and public have different objectives. Private sector has shareholders that they need to be able to respond to. But I'd like to get your view here, Karl. And Paul, you can come in as well to give us your thoughts on the bankabilities of these projects, the risk as well that you need to cover. At the end of the day, you've got shareholders that you need to go back to and say, look, here are your dividends. You've reaped some kind of reward on your initial investment.
Yes, I think there's got to be some sort of return. That's a given. But I think maybe early on, as a private investor, one has to say what is the likelihood of that return occurring in the future. Okay, and then that also determines, what effort you're willing to put in, how much you're willing to invest up front. But maybe what we've found, and those that I've been involved in, where it actually works a lot better, is involving a lot of the role players up front. All right, and we've seen that because maybe just from my world, in terms of risk and managing the risk, yes, there's financial risk, and then there's sort of operational risk, and then there's ours, the more physical type of risks. But we've actually been involved and given views on the construction of certain buildings, which then led to reductions in risk, which led to reductions in the actual cost of financing, which then made that project, I'm not saying this was the only thing, but made that project a lot more attractive to potential investors, and also then reduced the risks around that project as well. And I think that's something that should be key.
The ongoing participation, I like what you've referred to, Paul.
Gugu, can I just emphasize one point that Zienzi also alluded to? On the coalface, practically speaking, as we go into the markets with the clients, one of the things that are hamstringing business and the development of the projects is very much the capacity of the utilities. Because you must remember that if a World Bank makes a loan, it does it through the implementing agency, through the power utility, the road agency, or whatever. And that can get quite complex when you're working with utilities on the public sector side. I'm not talking about the commercial side now, but on the public sector side, because I'm representing a lot of contractors and consulting engineers and so on. There are some very efficient utilities. One of the reasons why Namibia is doing relatively well is because its utilities are efficient, if I can give a good example, rather than the negative ones. But that's why organizations such as the GIZ that does a lot of technical assistance, it's not just the funding agencies, it's the technical assistance agencies that are very important in order to capacitate. It's not that I'm being critical of the officials within the utilities. They've got a lot on their plates. For example, in Mozambique, where they've got major hotspots at the moment, in the form of Pemba, and a lot of infrastructure requirements that must underpin the coal in the Zambezi Valley and so on. So there's a lot of pressure on them, and they're decent people. I work with them, but they're under tremendous pressure. And that's where things can get stuck. Although they are good utilities, and they are unnameable for the moment, weak utilities too. And we have to unblock that. We were just talking before about one of the utilities that's blocking things for us. So it's us at the practical level. That's a very important issue.
Whose responsibility is it to hold them accountable, though?
Well, ultimately, the state-owned enterprises, the government has to ensure that these utilities are more efficient.
So does it take the private sector to be more outspoken about the pitfalls and the backlogs that are occurring, so that the public sector is aware of it?
The private sector, is always, for a start, it's not united by the very nature of it. And you'll get statements coming from individual business leaders on these things. But there's always the idea, if you're going to work in that country, don't be too critical, etc., etc. And it's difficult because you're working whether you like it or not, you're working within a political milieu as well. And you have to be very conscious of the realities. So it's easier for me as a commentator more and dealing with many clients in many countries to say that when an individual player, it's difficult. They have to play, they're walking on eggs as well.
Carl, you wanted to add something?
Yeah, I think also one must be very careful when we talk private sector. I mean, Paul also said it's not one homogenous group with all interests aligned all at the same time. It doesn't work that way. Excuse me. However, I must add that I was encouraged last week. There was an African investment summit that was held specifically for the Cele region in Botswana, hosted by the NEPAD Business Foundation, where 6 priorities were identified, and those are the industries and sectors that Cele will focus on, and invite the private sector into those discussions, because that was clearly what was lacking. So then they can work, or we can work together around executing just those 6 priority areas. And I always say, don't try and do 20 things and get none of them right. Do 5 things and get those absolutely right.
Maybe if you can engage us, just highlight some of those particular focus areas that we can actually unpack if the identification is correct and how we can practically move forward in achieving them all correct.
I think, certainly agriculture is always one that comes up. Okay, so how does one move from subsistence agriculture into sort of commercial and mainstream agriculture? So there you most definitely need a government or a government organization or a department that needs to, whether it's concession to some of those land, to the private sector, private individuals who are then now commercial farmers, and to increase the hectarage and the output, that's all in there. But then you need those specific players. So if that's on the list, then what we would push back to the heads of state at that Cele summit is to say, well, the private sector in this priority area for you is these players. Make sure these players are included in the discussion. Then we move on and say, okay, is it water infrastructure? Okay, then these are the private sector players in the water infrastructure. Let's deal with those.
I'm happy that you gave us that example, and I want to go back to a statement you alluded to earlier, Paul, when it comes to the development of infrastructure, which is still highly focused on commodities. We know about energy across the African spots on the African continent, where there's a lot of focus on that as well. We know about some of the hard commodities. Unfortunately, the risk there as well regarding the commodity prices such as gold, copper and platinum falling quite substantially, but there's a lot of railway infrastructure connected to the mines, moving out to the ports. Are we still losing focus by focusing too much perhaps on the resources that we have and driving infrastructure development around that, especially given the over-reliance to commodity prices that we as Africans don't actually control?
But remember, we as business are going to be opportunistic by the very nature of it. We are going to go where the money is and so on. So remember that a lot of the resources, what I call economic hotspots, like for example Pemba or Lake Albert, or Solwezi. These, why are these hotspots? Why are people conglomerating one point? Because there's a resource, be it gas, be it oil, be it iron ore. Now, unfortunately, in 2015, we're sitting with rock bottom prices, which is making people sit on their hands at the moment. That's a fact. But remember that these are isolated, because what we suffer from in Africa is isolated resources. Often they are in, for example, Guinea-Conakry, where it's one of the biggest iron ore deposits, the Simandou iron ore deposit. You can't move the iron ore. The only way to move the iron ore in bulk, or the copper, or whatever it may be in bulk, is going to be by rail. We have, and that presupposes another thing. It presupposes development of the ports, because rail and ports go together. And there has to be bulk handling facilities as well. So that is what we're talking about. We talk logistics all day long now. Because, and remember, you are developing in a remote area. Like, you can't get much more remote than Palma, where I've been recently. I mean, it's really remote. Now, you're going to put up a big LNG plant there and so on. What's going to happen? So your CSI becomes very important. Corporate social investment is a huge knock-on effect of that. But from a sectoral point of view, we've neglected our rail sector in the past enormously. It has to come back into play again. You've heard about the announcements of the Northwest Rail in Zambia, for example. I've visited nearly all the ports now on the east and west coast. I haven't gone to Lamu yet, but I've been to the others. And there's substantial development. I've just been to Takoradi in Ghana, where there are substantial around the oil and gas services hubs and so on. So rail has to find its way. It's very capital intensive, very difficult. But look at it, it's happening. I mean, there is a line going to Nacala now. It's going to happen. Northwest Rail will happen. The Lobito line has been built. So there is development, although, you know, there's still a lot to do and there's still many, many isolated areas.
I'd like us to stick to rail for a moment, because obviously you don't want to insure white elephants, which in the long term will become redundant assets. But are we finding that the financial model, Zienzi, to come to you and hopefully get your thoughts in, Karl, as well, before we go to an ad break, that focusing on rail for the moment, that the financing is there, that it is sufficient, and not only the financing to get the commodities out of the ground and across to the port and exported elsewhere, but that we're also finding strong initiatives to drive intra-African trade, to drive manufacturing across the continent and really improve economic growth, which is the fundamentals for infrastructure growth.
I think the key point is industrialization.
Yes.
Should we be taking raw materials out of the country, out of the continent, and then their value add is done outside the continent, and then come back to the continent
and buy it back at a higher price.
And we buy it at 100%. I think that's really the key point here, which I think there has been a focus. Discussions have been happening in different, at governmental levels, different forums, but how are we going to make it happen? Industrialization, how is it going to happen? Right from agriculture, mining, you know, all those commodities, what are we going to do? So I think it's still a big, you know, challenge, but we need to work together with public-private partnerships. I think that's where it will come in. There is a need. So there is a need for public and you know, private sector to come together. And industrialization, I believe, it should actually be private sector driven or led. That's what I believe. You know, and how are we going to? I think it's important to start by creating success stories, maybe small scale, which is scalable. I think it's something that can be looked at. And on the agri side, you know, just market access. How can access, you know, to markets be created? It can be right, even flowers, growing flowers for the Holland market, right? We don't need beneficiation on that. It's okay for them to go, but then the foreign currency comes back. Yeah. So those are some of the issues that need to be looked at. But again, key to that point is transparent procurement processes.
Yeah.
And then on the rail side, we are talking about rolling stock. Public utilities, do they have to own the stock, the rolling stock, or they can do the leasing? So that there's an opportunity to start looking at leasing of rolling stock. But again, we also need to have strong leasing companies that will be able to work with you know, global suppliers, so as to provide you know, the locals at an operational lease you know, level, which will not have an impact on the balance sheet.
Exactly.
And then insurance will come in as well to come and insure the rolling stock.
Indeed.
That is leased.
I just want to get your views very quickly, Karl, before we go to an ad break, and Paul will come back to you. So I like the word that you use, industrialization. Is that what you take into account when it comes to insuring and taking up the risk on some of the infrastructural development projects? And like I said, you don't want to insure white elephants here.
Yes, we don't. And in the very broad sense, yes, we do, because we also want to be relevant to our client. And it has to be affordable to our client as well, because what's the point of paying a premium for something that you're not going to use? I mean, that's in nobody's interest. But I think what happens is, because now I think we're looking at a more regional type projects, and in something just practical, what happens is that it's fine in country. Let's take rail for an example. I'm no rail engineer, but I do know that in certain countries, the gauge of their railways are very different to their neighbors. Okay, now to move whatever commodity you got and to ensure that and all of those things from one country to the next will actually physically not happen, purely because the rail can't cross lines. Okay, so now you end up with bottlenecks, you end up with commodities sitting there, and then that's where pilferage happens and the likes. So I think one also has to say to leaders, whether it's Cele, whether it's NEPAD, you know, there's got to be a sort of more overall or general alignment just on the practicalities of these things. Yes, we talk about these large projects and rail links across from Namibia through to Botswana into Zambia, but if physically the goods can't move, then we can talk about it until the cows come home. It's not going to happen.
Precisely. Well, we're going to take a short ad break, but we will return after the break by venturing further into how we can practically unleash infrastructure development across the African continent. Don't go anywhere. We'll be back right after this. Welcome back to Mega Projects Africa. Still with me in studio are Karl Bishop, Head of Niche Business at Santam, Professor Mosad Elmissiry, Senior Advisor on Renewable and Sustainable Energy Initiatives at NEPAD, Zienzi Musamirapamwe, Head of Public Sector Corporate and Investment Banking at Barclays Africa, excluding South Africa, and Paul Runge, Managing Director of Africa Project Access. Well, we still have quite a bit to get into when it comes to practically unleashing the power of infrastructure on the rest of the continent. We briefly touched on railway during the ad break, but I'd also like us to focus on some of the other developments which are taking place when it comes to infrastructure development, and perhaps oil and gas or energy overall is something that we need to potentially look at because as you alluded to as well, Paul, at the top of the show, that it seems as though partnerships are something that are working favorably for the East African community of countries. But I'd like to get your view on this, Mosad, ensuring that the high-level measures and policies that are implemented actually do filter down to the benefit of those citizens living in those countries.
Actually, again, on the highest level in Africa, their approach is really to move regional. When you move regional, this is actually the optimum solution for actually developing the energy sector. Of course, each country has got their own interests, but the way forward to develop the energy sector, increase energy trade, increase and develop and create employment actual opportunities is to move regional. And in this regard, if you look to the PIDA programs, there is about 4 interconnectors, which is have to be developed by 2020. These 4 interconnectors link all the power utilities from north to south, from west to east, central, and then on the North Africa. So with these 4 corridors, it will ensure that energy is generated where it is most efficient. I don't need really actually to generate energy where I am. It can be generated on DRC, and I import it, and it becomes actually more cheaper to me now. And this is the approach which we are following in the development of the energy sector in Africa. Move regional. So with these 4 interconnectors, once they have been actually put on the ground, we can ensure that energy is generated where it's most actually efficient and actually transferred where it is highly needed. And in this way, the energy trade between African countries will go up. So far, the energy trade is bilateral. Most of the energy is bilateral, except in the SADC. The only what we call it auction energy trade market is in the SADC region, in the Southern African Power Pool. They have what we call day-ahead energy trade, and they're doing very well. But again, they've got their limitations. If you look the countries which are offering energy for sale, and the demand on these actually commodities, you find that the demand of late, last year and this year, jumped quite actually drastically. Before they were at the same bar, but in 2014 and 2015, you find that the demand on energy through the energy market, the auction, the demand is double what is actually being offered. But again, those who wanted energy, they got only about 20% of what they want. Why? Because matching the price, we need to work on it. Not only that, there's some constraints in the transmission network, which we have to attend to it. But the way forward is to go regional, generate energy where it is most efficient, and use it where it is highly needed. This is the way forward.
I know your area of specialities is on energy, but do we often find that maybe there are infrastructure development projects which appear to be flavors of the month? Given the energy shortages and crisis that we see on the continent, we know that that is a key and strong focus for the moment, but should we be implementing more of a multi-pronged approach? And in that multi-pronged approach, where we ensuring that infrastructure for agriculture, for railway, for energy, for water infrastructure as well, all takes place at the same time, shouldn't financing be thinking that way too, Zienzi, instead of the individual bankability of projects? What about a large grouping of infrastructure projects in order to make it perhaps more profitable?
That's a good point there. I think what we are seeing is most banks, they are partnering with DFIs, commercial banks partnering with DFIs. And obviously not just looking at one project, but looking at a number of projects, but not funding them all at the same time because they all have different, they are all at different stages. But having a pipeline, that's really a pretty standard thing, to have a pipeline and then engage on a proactive basis on how you can, one, de-risk that project, right, and then get it to be bankable. And then partnering with DFIs. I think that's really the key point. And then the other thing is when you look at funding, it doesn't have to be PPs. I mean, there's also tapping into the capital markets, the debt capital markets. We've seen the trend of governments going to raise sovereign bonds, euro bonds, or dollar bonds, tapping into those global markets. And the trend that we have noted is that there is liquidity out there. Most of those bonds, they are oversubscribed. If you look at the Kenya one, it was oversubscribed almost 8 times. The recent one, Zambia, twice. So really, the liquidity is out there. It's really about coming up with projects that that can actually be funded through maybe bond issuance or something like that. But there are also some sovereign wealth funds that are out there that are looking for opportunities, to put their money into. And again, the issue is bankability and enabling environment, transparent procurement process. So those are the things that investors will be looking at. And then commodities, we touched on commodities. There's a huge focus on domestic resource mobilization. Looking at resources within Africa. And the first one is the tax base itself. How can we help governments broaden the tax base? And we are looking now at, the governments are looking at maybe efficient revenue collection. And also, the revenue that is out there, how can it be collected? And efficient revenue collection, having straight-through processing, those are some of the products that banks have that can help governments with the efficient revenue collection. And then there's also royalties. We are talking about commodities. They come with royalties. It's the collection of those revenues, and how can they be maybe used to fund projects, specific projects. So opportunities are out there. Money is out there. It's really about bankable projects.
I want to pick up on a word that you used, which was procurement. And naturally, that's also quite a challenging issue on the rest of the continent, because we want local procurement and we also want the economic benefits of these infrastructure projects to really seep through to the individuals on the ground, corporate social responsibility. But on the issue of procurement, maybe the capital is available on the continent, but the other services and skills that we actually require, given the fact that you work on the ground and you implement the policies, Professor, maybe if we could gauge your views together with Paul as to the full implementation of this. Are we yet hitting the nail on the head?
I just want to point out that I prefer the term corporate social investment rather than responsibility. I like to see it in a business opportunity side.
As the capitalist that you are,
huh? I mean, it is an opportunity because there's work in CSI programs as well. In the oil and gas sector, which is particularly dominant at the moment, especially gas, the standards are very, very high. You have to meet American Petroleum Institute standards and so on. And in order to get local supply, especially in a place like Palma, the mind boggles because it's going to be extremely difficult. As one oil company said to me, just how many drivers and cleaners can I employ? you know. So the companies, the operators are very, very conscious of the need to beneficiate locally. They're very, believe me, they are very conscious of it, and they're trying very hard to do that. And I really want to speak up for them in that regard. But it's not easy. And you know, you need a 3-year ticket to be a welder in an LNG plant. So, you know, it's not just welding in your garage. So it has to be, and the standards are very, very high, as they are also in mining, but especially in oil and gas. So the need to beneficiate locally is realized, and local production, and to link up with what Zienzi said was the industrialization. Ultimately, as an African, I couldn't agree more that we have to add value locally. It's absolutely necessary. But we must be careful not to throw the baby out with the bathwater in the process. In other words, not be so stringent on the resources companies that it becomes completely unappetizing to be. It's a game. It's a fine balance that has to be struck here. Because I 100% agree that everybody must make a full effort and not just be drivers and cleaners.
Just to add actually on that point, actually Paul initially he raised the issue of capacity development. A very important element in any project is its sustainability. How do you sustain the project after it's been actually be implemented? And the issue of skills development, skills transfer, information transfer is very important when we develop a project. We have to emphasize that there's an element of skills transfers, skills building, so our own people can really maintain and sustain the project after it's been actually implemented. This is a very critical issue. Again, if you look to Africa Power Vision, one of the pillars of implementing Africa Power Vision, the vision where we want to achieve, well, the skills and the technical actually expertise transfer. So we build the capacity locally. It will take some time. It's not an issue which we can do it over one day. But if we insist on every project which has been implemented, that there's a very strong element of technology and the skills transfer, will be actually making headways in this regard.
Zienzi, you wanted to add briefly to that?
I think this conversation links to inclusive growth, right? With the global, maybe EPCs, contractors coming in to build the power plants, how can the local EPCs or contractors also tap into that opportunity, and how can they be connected? I think it's important, and I believe, again, it's a public-private partnership that needs to kick in, right? Just connecting, networking, connecting the global EPCs with local EPCs. I think it's important. And to the point that has just been raised, the issues around, you know, the local people. It can start even with small jobs, not maybe medium-scale jobs, operations and maintenance. You know, how can they be trained in that area? And then, you know, on old existing power plants. Here we are looking at bringing energy efficiency. And, you know, most what we are seeing, most power utilities, they are busy refurbishing their existing power plants so as to introduce energy efficiency. They must be involved. They should be involved in that process.
In Lake Albert area, Snook, Cele and Total have worked very closely together to produce an industrial baseline study, which is really, to me, a wonderful document, really, really good, where they basically planned out the oil development in Lake Albert and how they're going to roll out also the technical systems, right to agriculture, how it would roll out, how they would procure the different skills and so on. And it's very welcoming to see resources companies collaborating together to deal with an issue like that, which I think is a wonderful example.
Karl, it almost sounds to me as though there's an opportunity here for insurers like yourself to perhaps also look to ensure the support structures and systems that might be in place to help ensure the sustainability that Mosad alluded to when it comes to these large infrastructure projects. Is that potentially something that we might see in the future?
Absolutely. I think we look to that because, you know, I've said before is that there's so many stakeholders in this. It's not in isolation. Okay, so. And also the local economy and the local communities will need to benefit from this because they need it. That's why these projects are there. And a very good case in point is northern Mozambique. Okay, so you have the gas pipeline, but there's a number of services now that are needed around that, whether it's residential, whether it's local schools, hospitals, you know, all of those sorts of things start coming up, which are all insurable assets. Okay. But where people also forget is that now if anything happens to those assets, now you start again, right? And it costs everybody more money and the local community loses out. So, for us it's very important that we look to projects and we look to do things that are sustainable for the local communities going forward as well.
I'd like us to venture into the topic of international collaborations, as we alluded to as well, with the basics ensuring that the locals do also find efficient support there. Whenever we hear about studies regarding China and the African continent, some are either for or against it. You look at also new relationships being established and renewed between the African continent together with their counterparts in the US. Maybe I can start with you, Professor. How do we balance the associate or rather efficient participation of foreign investors on the continent, learn from them, and also ensure that at the grassroots level, that our locals do essentially benefit here at the end?
Actually, in the last Finance for Development conference, which was held in Addis Ababa about 1 month ago, the issue of the new initiatives which are coming to Africa. There's initiative from, Power Africa Initiative, President Obama initiative. There is Chinese that are coming with initiative. There is Africa 2020 initiative. There is Sustainable Energy for All initiative. What we do with all this initiative, and the position which was taken by Africa, which was made actually very clear, any initiative, it has to really follow. We have got a coordination mechanism within Africa, which many people don't know about that. When it comes to project implementation on a regional or continental, it is NEPAD. When it comes to decision making and report to the head of the state and the government, it's the African Union Commission. Any initiative which actually would like to find actually its space in the African market, it has to go through these two main body of Africa, the African Union Commission and the NEPAD. So we can direct it to the area where the need is most. Initiative, when they are developed outside Africa, they didn't take into account what's happening on the ground. So when they come through us, we can direct them to the right area where their contribution would be quite significant. And the emphasis now on any initiative, it has to be project-oriented. We have to really target certain project, a specific project, with actual an implementation plan when actually is going to be achieved. So again, partnership is very important. There is no doubt about that. Because in partnership, we are putting all the resources in one pot. But we need to really choose which partnership which will help the African interest. We know exactly where are the gaps. And through the African institution, we can direct any new initiative to fill these gaps, not to really duplicate what's happening. It is actually needed to ensure that the resources are efficiently utilized, and as well, we can achieve our target of empowering our people to really develop, implement, and sustain our projects.
Paul?
Gugu, there's one very important thing here. We're discovering as we move around trying to clinch deals in Africa and access the projects that there are many more unsolicited bids than ever before. Unsolicited bids presuppose another way of operating. That is to what I colloquially term hunting packs. We have to form consortia. Because if I put on a South Africa Inc. hat at the moment, not necessarily because a lot of my clients are not South African, but if we are to do that, we have to use our financial instruments properly, we have to use our export credit agencies properly, we have to go, because one of the reasons why the Chinese and the Indians, not just the Chinese and others, succeed is because they come holistically at the project. And they're able to offer everything from the pre-feasibility through and the financing and even a bit of political input to ensure that these things happen. So it means that if there are unsolicited bids, then we have to hunt in packs. The other thing I just want to quickly bring up, because we have not touched roads at all, and that's very important. I've worked on the North-South corridor. On the energy side, the interconnector projects and that the professor was referring to, they were very encouraging, especially I'd say in East Africa, because I'm seeing a lot there. But on the road side, we have a problem, a very big problem. We're trying to, with the North-South corridor, which our President Zuma is the champion of, is to implement one-stop border posts to bring down the costs. Guys, with a few exceptions, it is not happening. Because despite all the pressures in the big circles, when the tire hits the road, national interests precede regional interests.
You're right.
I'm telling you, when it counts, it'll come first. So I can throw out many examples to you of where things are just not happening, where there are encouraging things like, for example, the Pedicle Road that links Zambia through that little strip of the DRC, and that's happening. But will it be turned into a one-stop border post? It's not at the moment. And as soon as it can, we can move goods quicker and more efficiently, and very important, more cheaply.
Well, it is unfortunate that we don't have a government representative here today, but are there, and maybe we can come to you first, Professor, and get your views from each of you, just as we head into summarizing this particular panel discussion as to the key tools that need to be implemented, hopefully as soon as possible, that will truly unlock African growth through infrastructure on the continent. Let's come to you first, though, Professor, with regard to the national interest overtaking regionalization.
We have actually to take note that each country has got their own national interest. And again, on the regional level, as I said, the optimum solution for any infrastructure project is to go regional. And we need to strike a reasonable balance between the two. We can't ignore the national interest. And at the same time, we have to really take note that the way forward is regional. And this is where the political, actually, influence comes in. This is where our leader at that level have to decide which way we go. How can we protect national interest, and the same way we move regionally? It is not easy, but this is the way we actually have to go. We have to strike a reasonable balance between national interest and, of course, the regional. Because as you know, and because of history reasons, countries went through a lot of things, and still that element of mistrust.
Yeah.
I can't rely upon next country to provide me with energy. Suppose we differ, they will cut the energy from me. So countries, of course, at the national level, they have to really look after the interests of their own countries. But we have to really develop that element of trust. This is where the African Union comes in, at that high level, the political level. Ensure how can we strike a reasonable balance between national interests and the regional one. And they are doing a lot in this regard. And there's actually some success stories in this regard. Paul talked about the one-stop. Chirundi between this is a success story.
Yeah, but not enough of them. Not enough of them.
But we need actually, this is what I mean. We need really to develop and support these positive, examples. Yeah, of course we are complaining there's not enough, but there is some success stories which you have to really develop and really quote and encourage.
Precisely. I'd like to go back to the opening remarks that we made when we were referring to the glass half full or half empty or overflowing, but to ensure that there's a continuous flow of positivity when it comes to the African story. Karl, let's start off with you. Are there particular measures that you would like to see in place as someone who comes in to actually ensure these massive projects that unfold across the continent?
I think I mentioned it earlier. I was very encouraged by particularly the Cele region, saying these are our 6 priority areas and let's focus on those and deliver on those. I'm very encouraged by that, because as private sector individuals, you judge by output, and let's do that and let's go ahead and implement those things. I also want to say something which we just mentioned now also, is that collaboration, particularly between private sector partners on these infrastructure projects, particularly on the mega ones, is vital to me. Okay, it raises a few other questions about collusion and anti-competitiveness and all of those sorts of things. But I think we can deal with it if we know what the model is. And our counterparts have been quite successful at it. So I think, as Paul puts it, hunting packs, okay? But collaboration to me between all those interested parties is vital.
Mosad, if we can get your points.
Well, actually, the way forward, as we initially said, let us focus on developing project to bankability. This is an area which is critical. And there is success stories in this regard. Actually, we moved a long way in this regard, but we still need to do more. There is NEPAD, Infrastructure Project Preparation Facility, which target infrastructure project, gives them finance to bring them to bankability. There is the recently launched Africa 50, which target the private sector, mainly private sector. And actually, there's a lot of money being pledged. It's been launched last year, and I think the head office in Morocco. This will be target mega project, infrastructure projects, which is of particular interest to the private sector. So there's a lot of work actually being done in this regard. But the key element let us really work together to develop project to bankability and create conducive environment for private sector participation.
Selfish interests aside, it sounds. Zienzi, your closing remarks?
I think key focus capacity building, which talks to bankability, getting the projects to a bankable stage, but also capacity for public sector to be able to fully understand the PPP agreements that are being signed because of their complexity, including the risk-sharing agreements. I think it's important because at the end of the day, if it is a PPP, the asset has to come back to public sector and in which nature. And during the process, 20-year, it can be a concession of 20 years or 30 years. How is the risk sharing going to be done and managed? I think there's one point on capacity building. And then the other one is inclusive growth.
Yeah.
Right, getting the local players to also work together with the global players in delivering infrastructure. And then lastly, it's really about industrialization, which we spoke about. How can public sector and private sector help in driving and unlocking the opportunities within industrialization and private sector lead industrialization path?
Paul, very quickly in 30 seconds, you're the man on the ground.
In practical terms, if African suppliers are going to succeed in accessing the projects, they must know more about the instruments available to them, because our European and Asian counterparts are using them very effectively. We are still too ignorant. We need to be able to really understand and know that. I take up very much the success stories. What went right at Chirunda is one of the very few examples of one-stop border posts. But and I implore on the people in the big conferences, in the NEPADs, halls of power and all of that, to not forget us operators on the ground. Find out what are we actually experiencing, what are we experiencing at Kasambeleza, and connect with us, because you need to know the real issues on the ground and not just the theoretical stuff. Thank you.
Well, I'm happy to note that it does seem as though there is renewed optimism when it comes to infrastructure development on the continent to hopefully unleash economic growth. Well, that has brought us to the end of today's discussion. A big thank you once more to all of my guests: Karl Bishop, Head of Niche Business at Santam; Professor Mosad Elmissiry, Senior Advisor on Renewable and Sustainable Energy Initiatives at NEPAD; Zienzi Musamirapamwe, Head of Public Sector Corporate and Investment Banking at Barclays Africa, excluding South Africa; and Paul Runge, Managing Director of Africa Project Access. Thank you too at home for watching. Until next time, it's goodbye.
Mega Projects Africa, proudly brought to you by Santam.